Are you saying it's a mistake that they're cutting rates?
I am. I don't think it's a huge mistake. The thrust of what I wrote there is that it's very debatable right now. So you just gave Neil Kashkari's view, which is a defensible view. It's also a defensible view that the Fed should be standing pat, like Eric Rosengren and Esther George said. It's one of those times. Sometimes it's obvious what the Fed should be doing. This is not one of those times. And you can see the Fed internally on the Federal Open Market Committee is very divided.
So how should the market take it as far as what the Fed is going to do next and what kind of easing cycle we're actually in?
You know, I hate to say this because market people like concreteness and like total predictability, but when you're in an equivocal position like this, the next move of the central bank is going to be equivocal. I don't know what they're going to do. If it was up to me, as I said, I would stand pat until I saw a fire that needed to be put out, and then I would bring out the heavy-duty hoses and really cut interest rates a lot. But that's my opinion. I'm not a voter on the FOMC. A few of them agree with me, but some of them are on the other side, absolutely.
Alan, whether it's Rosengren talking about the commercial real estate market, Brainard's now on the tape saying that covenants on leveraged loans have weakened quite notably. I mean, do you see those excesses even as where we are right now?
Yeah, a bit. They see it better than I do. They've got a lot of data coming across their desk that I'm not seeing. But sure, when you've had such low interest rates for such a long time, you're going to, people get sloppy about managing money, and that means a lot of things. So for me, it means I leave too much money in my checking account. For people writing covenants, they get very sloppy about writing covenants, and credit is easy and so on. Nobody thinks credit is tight, by the way. I'm not sure even Neil Kashkari, given what he just said, thinks that the economy is being constrained by tight credit. But those kinds of things do happen in a near zero interest rate environment.
Just to push back on your view, I mean, haven't we seen some whites of the downturn's eyes, including global growth continuing to deteriorate? The Fed chairman mentioned capital expenditures and the business uncertainty weighing on investment in this economy. The manufacturing numbers have been pretty weak. The yield curve inverted, which has signaled every recession post-war. I mean, how do you characterize some of those risks, which is why the Fed says it is cutting?
Let me try to go backwards. So from the yield curve inverting, I understand the history, but the history is based on the Fed shooting up short rates and long rates lagging behind, and that's how you got inversions. That is not at all what is happening now. So I discount that one heavily. What you said about manufacturing is true. It's tied to the trade. The trade war is the biggest risk to the economy. If I make a list of risks, that's right at the top. And that's hitting manufacturing and farming already. But you got to remember, in terms of employment, say, if you add up those two sectors, you're talking about 12% of American jobs or something. The service sector is much bigger. It's doing quite well. The consumer is spending like American consumers do, which is making up for the fact that the investment response to, say, the tax cut of 2017 has been disappointing. But not to disagree with you too much, Sarah, there is a case, and you've pointed to some of the things, to cut rates now. I just don't find it very powerful, given that the Fed only started this process at an upper end of the range of 2.5%. If they were starting at 6, I would say, yeah, like shoot some bullets right now, just in case. But given that their pile of ammunition is pretty thin, I would prefer that they save it for when there's more than just a few little reads.
Well, at least we have more bullets than some of the other international central banks, like ECB
yeah.
and BOJ.
Oh, and yes, absolutely. I should have said that. What you said about the rest of the world is largely true. We are still the shining star. You compare us to Japan, compare us to the EU, we're looking quite good.